Welcome to Commercial Real Estate Pro Network CREPN Radio. Thanks for joining us. My name is J. Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today, my guest is Tracy Cousineau. Tracy is a powerhouse real estate entrepreneur and business coach. She is the co-founder of the #1 real estate team in the Atlanta metro area, ranked number 12 as the fastest growing company in Georgia by Inc. magazine, and a real estate agent coach. And in just a minute, we're going to speak with Tracy about creating wealth through real estate and how to avoid certain mindset pitfalls. But first, a quick reminder. If you like our show, CREPN Radio, there are a couple of things you can do to help. You can like, share, and subscribe. And as always, please consider leaving a comment. We love to hear from our listeners. Also, if you'd like to see how attractive our guests are, be sure to check out our YouTube channel. And you can find us on YouTube at Commercial Real Estate Pro Network. While you're there, please consider subscribing. With that, I want to welcome my guest. Tracy, welcome to CREPN Radio.
Hey, thanks for having me today.
Well, hey to you, and so glad you were able to join us. Before we get going, if you could share with the listeners just a little bit about your background.
Yeah, so I started in property management in 1989. And 10 years later, in 1999, I got my real estate license and full force took out my $12,000 in my 401k and hit the pavement running, full-time in real estate, young in my mid-20s, and didn't know what I didn't know at the time, but I've learned a lot along the way in the last 21 years. So I figured at the time, if I could lease apartments, I sure could sell some houses.
Got it. And are you a native from Atlanta, or is that your home?
This is home. I was born in upstate New York.
Okay. In Atlanta, you've been doing, or has your real estate career been based in Atlanta?
Yeah. So I moved to the Atlanta area in 1980. Okay.
Gotcha. And tell me a little bit about just the marketplace in Atlanta. Are you, I've heard it's just on fire, lots of growth. Can you speak to a little bit of that?
Yeah, we're definitely busy. Right now our production is up 42% from last year, even during the pandemic. We've pivoted where we need to, and we've shown up in the community where we need to. Our team, we cover 12 counties in Metro Atlanta, so we have a very wide range, hours from one section to the next. To get from the point A to point Z would be hours worth of drive. So we cover a lot of ground in Metro Atlanta. We feel that if we don't get to them, then maybe they might not have the best experience that they need to in the industry. So the more people that we can serve, we know that we provide a great client experience and have the certifications of negotiations and can get them the most money for their investment. So we always try to get to as many people in our community that we can.
Gotcha. And specific to the Atlanta area, in the time that you've been working in real estate, has the growth been steady, or is it a more recent phenomenon?
No, so this is my third recession, if you want to call it, since I've been in the business, and the market's down about 35% for the most part in Metro Atlanta. We just, again, showed up to serve our community and where we needed to provide for sellers and for buyers on, the American dream. So, the market's declining here and there in different parts of Metro Atlanta, but things are selling if you know how to make the best first impression to get the property sold for them.
When you say down 35%, are you referring to a sales listing price, or what are we?
Yeah. Well, the MLS is down by the amount of listings.
Oh, number of listings.
sales.
Okay. Okay. Gotcha. Are the prices holding firm year over year, month over month kind of thing?
Yeah, I mean, there's been in some areas you might see a little decline, but I haven't seen anything major. The homes that have what everybody's looking for right now, the pools, the extra home office, the finished basements, the resort style backyards, those homes are selling really, really fast because it's supply and demand. People are working from home, kids are digital learning. So people are looking for specifics in properties. So those homes are going to sell a lot faster, and they're going to have multiple offers, which are going to raise the price for the seller. Homes that are older, that are not updated, people don't want projects right now. So those might stagger a little bit longer, or they might have more of a reduction depending on the price point.
Gotcha. And the home buyer versus the investor, is there do you see a lot of investors trying to get into the single family, or is it more end user, kind of the homeowner?
Well, I think we've got both right now, especially with we're in a territory right now that we just don't know what's going to happen. You hear some talk about, oh, we're about to hit something. It might, people think November, December, and then you have people, oh, by February, you're going to start to see something. But for me, I'm looking more at, I'm starting to get more calls on short sales, or people not being able to make their payments because they've lost their jobs during COVID, or they've deferred out payments as far as they can with the mortgage company. And a lot of mortgage companies want that deferred payment back, in a balloon payment after the deferred period is over. So, you've got some people just depending on their financial situation right now because of the pandemic for this year. But loan modifications are coming due. So a lot of people did an IOU at the end of a 10-year loan modification. So you're starting to see a lot of that hit also, that they've got a balloon payment due, or they need to refinance and maybe now they don't have a job because of COVID, or, something. So there's a lot of different stuff going on. Unfortunately, COVID's caused a lot of divorce situations that we've seen as well. And so it really depends on the situation. If it's a great deal for an investor, I think the times are starting to come that there'll be some investor deals that investors will want to start keeping their eyes and ears open.
No, I appreciate you sharing that, because I think that depending on what you're watching, or however the news is painting it, or whatever the winds that blow, it can be kind of a foggy kind of a sense of what's going on. But I think there's been a kind of a sense that these things are coming, but I don't know that I've talked to too many people that have seen them actually materialize.
No. And I think it all has to do with mindset. I know where my mindset was during 9/11, and I know where my mindset was during the Great Recession. I know where my mindset is now. So I didn't feel anything during 9/11. I had a bad negative mindset during the Great Recession because I allowed noise to interfere with that. And then when we hit COVID, my goal was, how do I serve others? How do I show up? How do I keep helping the community buy and sell real estate? That's what my goal is. And so I showed up in a different way that I did during the Great Recession, and it was huge.
Sure. No, I was kind of curious though more about just you mentioned that there are some of the, you're starting to see the people asking about short sales, kind of the cumulative effect of having taken a deferral and now the money's due, and perhaps the job isn't there anymore. Is that anything you feel like growing, or is that just kind of random calls right now?
Honestly, I hate to say either way, but my opinion, if that counts, the amount of calls that we are getting are, we're hoping that they have enough equity right now, and we're just educating them the best that we can. This is what we can sell it for now. In 6 months, and we don't know. So this is what, if you want to make a decision today, this is what we know we can sell your property for, but we don't know where it's going to be in 6 months. if right now you're not in a short sales status, and I suggest that if this is your financial situation, that we go ahead and make that move now so that you can pull out the equity that you need to before you're completely upside down. And so each house is going to be different, and each situation I find is different with every house that we go to sell. And it's really just educating the consumer and really giving them their options. My goal is to always put more equity in somebody's pocket than take it from them. So, I want to bring everything that I can.
Oh, appreciate that. Tracy, I was looking on just Google before or preparing for this call and stuff. And I was just going to ask you, it looks like you're into a lot of things beyond just being a real estate broker. Did I see you're also a host of a TV show and own a retail store? Looks like
Yeah.
you're quite the entrepreneur there.
Yeah. So I'm on a TV show called The American Dream. I'm also working on a production of my own TV show called For Sale in the City. And so, just hosting a TV show for Atlanta real estate and the community. So that's in the works. Launching a new book, and then have a co-book with my partner that we're putting together for real estate. I have a clothing store. It's a women's clothing store. I have a women's group called Women's Elevation that I help female entrepreneurs grow their businesses. We have a call center, so we have an inside sales department as well. And trying to think what else we have. My mind doesn't shut up, so I just keep going.
No, I saw it looked like quite a prolific list of accomplishments and investments, or at least looked like you had multiple pots on the stove there, so to say. So that's good.
No, don't always put your eggs in one basket is what I learned during the Great Recession.
That's good. That's good. Let me ask you, you mentioned a little bit about the changing times, and this is your third recession. As a real estate broker, you kind of have your finger on the pulse of what's happening in the marketplace, and I would assume have a much better feel for when something is priced more competitively than not. One of the things that I've kind of been amused by sometimes, and it's not right or wrong, but I'm just kind of curious as a real estate investor myself. I'm always kind of curious about real estate brokers and whether or not they invest, and just if you can speak to that a little bit. Do you do any investing?
So I did prior. I did during the beginning of the 2000s. I am just now getting into looking at portfolios because we have ran in the past the guaranteed sales program, and we have found great rentals for other people. So now it's just looking at the opportunity. Our goal is also to look, in the Florida area as well, and see now would be the time to pick up those kind of condos and stuff. So I see that since we do get so many calls and we are on radio and TV, then I just see that come fall and winter, there might be more options. And so I haven't been coming out of the Great Recession because the market just kept going like this. I lost everything during the Great Recession, so I didn't have any income or credit to be able to do any investing and pick up what I needed to during that time. So for now, I look at it as if I can make investments and I can purchase other properties, I can use those for rental properties for people that may have to sell their property now and need a place to go to. And so for me to find other properties at a discount would make sense because I'm going to help other people that need to move into the rental market.
Right. Now, I think that sometimes it's thought of as that the investor is, stealing something or something like that. But the reality is there's usually two parties to the deal.
Yeah.
And it's trying to make it a win-win.
Yeah, I just, I would hate for anybody to lose. Not only do they lose their house when it's in a foreclosure, but they also really hurt their credit by doing it that way. So if you can find a way to work it out, without them hurting their credit and not having to sell their property on the courthouse steps is always a great investment for all parties.
Right. So let's talk a little bit about creating wealth in real estate. What are some of your thoughts on how one can create wealth in real estate?
Well, definitely right now, the rental market is huge. And so, having, if you've got a property that you are considering selling, but you don't need to sell it to purchase another property, I would always, take a look at what does the rental market look like in that district. What is my return on that? Do I, can I maintain that house? What is the size of that house and maintain my house? So when you start in that investment cycle, those are the first questions that I always ask, especially when it's a seller that's never had anything to do with rental property or investment property is, let me look at this. Or if you want to flip a property, I prefer to flip property, I think, versus renting property, because you can fix it to how it needs to be fixed, pull the equity that you need to when you sell it, as long as you're making it a trend. During the Great Recession, those, people were hiding mold and they were hiding all sorts of problems inside houses. And for me, I don't like that type of investment. If you're going to pick up a property, in my opinion, fix it to the way that it needs to be fixed and don't leave the buyer behind with stuff that needs to be fixed later. Because I walk into that all the time as a real estate broker, because now they need to sell it, because now they hate the house because they bought it from an investor who, took a lot of shortcuts just to put money in their own pocket. So I always say, if you're going to invest into real estate and you're doing it for a flip reason, please do it the right way, because at the end of the day, your character shows from that. So that's really huge, because I see it all the time, and it really stinks to see that. I've got a buyer, their first house right now, and 2 weeks after they moved into their first house in their early 20s, there's about $200,000 worth of water damage because an investor fixed a pipe in the wall but failed to crimp it. And so water just exploded everywhere in the house while they were at work. And so it ran water throughout their house and did $200,000 worth of damage to their property. And so they don't like their house so much anymore. This was their first house, and this is where they're going to begin to make their memories. And now they're left with a watering mess that they have to fix. So, I'm just putting that out there because, when we look at investment, if it's not something that you do on a daily basis, always educate yourself on how to be the best investor.
Sure. With that, you talk about the investor that's not doing the thorough job, and water mess is a mess.
Yeah, water will rot your world, is what I say.
Yeah, no, that's good. What are some steps or some ideas to help avoid that, and also even just kind of mindset pitfalls?
Yeah, go into it with what is the end goal. If you're doing it for a rental, I think that's great. People need rentals long term. Just make sure that it's something that you can maintain when things fall apart, etc., and that you have a Rolodex of vendors that are going to show up when they need to show up, because that's huge in the rental market. If you're using it for a flip, work well. If it's not something that you have a trade for and you don't really know how to fix whatever needs to be fixed, electrical, plumbing or whatever, you hire the professional to do it the right way, so that you're not left being, sued later for something that wasn't done right or disclosed. So I always say full disclosure on stuff, and to make sure that you find the right contractors that you're working with.
Gotcha. I'm looking down my list of things here. Can you describe some of the typical issues that you run into right now in this marketplace?
Really, it's just educating, again, sellers that you can't just wake up and say, that's what I want to sell my house for. And it's really, showing them what an appraisal is going to come back at for the value of their home, and making sure that they understand. And I won't overlist a property, because it's my job not to overlist a property. It's to maximize their price for them. But if it doesn't make sense, it doesn't make sense. And to be a bold enough person to say, hey, I'm not going to set you up for failure and list your home at 800 when I know that it's only going to sell for 750, you know. And then help educate on, a lot of people have the mindset that if I list at 800, I'll take 750. Well, that 800 buyer is probably looking from 800 to 850. So you already lost them at that 750 mark. But then when you have to reduce it to the right price that it should have been at, you've already lost basically so much traffic, because your best traffic comes in the first 2 weeks of listing your property. And now people are going to wonder, well, they have been on the market this long and they've already had to reduce. What's wrong with the property? So you set yourself up for failure if you don't list your property at reasonably what it needs to be listed somewhere around. So that's always a risk, especially right now, you know, we don't know what's going to happen. I'm going with the mindset that we're just going to keep killing it like we are, and the market's just going to keep going. And that's just the positivity that we just keep going with. And we're selling homes, we're selling multiple homes every single day. So we just keep going with that mindset, and we'll keep the economy going as much as we can in Metro Atlanta.
No, that's good. What are the kind of the range of prices that you're seeing right now, and what's the median price?
Yeah, you know, our average sales price in our office is around that 325, 350 mark. Okay. And I believe that for Metro Atlanta, it's probably that 285, 300 mark. Anything under 300 sells overnight still. That's just that first time home buyer and that downsize price point for now in this area. But, you know, we're closing $1 million and $2 million sales. So, you know, we're not feeling anything. So I'm going to, keep going with that positivity. I'm working on a case study today and tomorrow, so I'll have to get back with you on this one. But I want to pull the last 30 to 60 days worth of appraisals that we have from our listings and buys, and look and see, because I noticed that on an appraisal I was looking at yesterday morning, the appraiser put in this particular area that he's beginning to see in decline was 3 areas on the appraisal that he had seen of the market in this one area. And this area is a pretty happening area in Marietta. And the price point was only like low 200s. And I'm thinking, where did he get that data from? I need to go find this, because I can't imagine that area has a decline in market. That doesn't make sense to me. So I'm like, ooh, how many appraisals are they doing and what are they seeing? So I need to go back and research that and look and see where he pulled his numbers from. But then I'm like, ooh, let me go look at a bunch of appraisals so that I can see, is this a trend or is it just this one appraisal?
Right. Now, I think the thing always in residential real estate is, whatever the neighbors or the homes around you are selling for is kind of the benchmark. I mean, that's a reference point, right? When they're doing the comparisons.
It's apples to apples, and then you take off the oranges.
Oh, there you go. I like that. Take the oranges. Got it. Hey, Tracy, if we could, I'd like to shift gears here for a second. By day, I'm an insurance broker, and as such, work with my clients to do some risk management. And there's 3 different strategies we typically look at. The first is, can we avoid the risk? If we can't avoid it, then we look to see if we can minimize the risk. And when we can't avoid or minimize, we look to transfer the risk. And that's what an insurance policy is. And I like to ask my guests if they can take a look at their situation, their business, their clients, however you want to frame this. And I like to ask them to consider or identify what they consider to be the biggest risk. And for clarity, I'm not looking for an insurance-related answer. Mm-hmm. But if you're willing, I'd like to ask you, Tracy Cousineau, what is the biggest risk?
I'm going to go for our clients' sakes and customers, or buyers and sellers, is if you're a buyer and you need to have an inspection. You need to know if there are any issues with the property. You need to make sure that you hire a home inspector that has all the credentials, that they are checking everything for you and that they're not missing stuff. Radon is a huge thing in Georgia because there's lots of rock. And so, if always have a radon test, and then always check for termites. Homes in Metro Atlanta, they've either had them or they will have them. So those are always three things, because all three of those things could cause a risk to your insurance. Radon, there's lots of issues that could cause it, but in my opinion, if somebody comes to your house all the time and they're stuck in an area of your home that has radon, this could cause a health issue for them, which will then go back to your insurance, possibly. Or if a buyer moves into a house and they didn't have a home inspection, and let's say that it flooded or it caught on fire because something was missed, there were some electrical issues in the panel box or whatever, those are all risk. And when they close, that's their risk and their, and their insurance that have to go back and find out where the problem came from and where it lies from. Vacant homes as well. So with sellers with vacant homes, you better make sure you add on that protection, that you let your insurance company, know that your policy needs to state that your property is now vacant, because there are many things that can happen. We had a vacant property and we got a call in the middle of the night that it was on fire and the house was burnt down. Or you can have an intruder, mess with it. There's just so many different things that you always, personally for me, and my personal situation is we're putting in a pool. So it's like, okay, I need to make sure that I'm adding the pool and I'm adding the fence. And, we are always looking at what could go wrong in this situation and then figure out, okay, how am I less reliable for it if I take the right steps to clear it? So I always think about what's the end goal and make sure that anything in between the end goal doesn't, I didn't miss.
Well, that's good. No, I appreciate all the insurance reference there, because that's, you speak the truth. A lot of people don't always think of those things, and those are, definitely some issues, especially the vacancy and the change in exposure. Appreciate that. Tracy, where can the listeners go if they would like to learn more or connect?
You can find me on Facebook at Tracy Cousineau Connect. You can find me on Instagram at tracy.cousineau, or you can find me on LinkedIn at Tracy Cousineau.
Got it. Tracy, I can't say thanks enough for taking the time to talk. I've enjoyed it, learned a lot, and I look forward to doing it again soon.
Yeah, I would love that. Thanks for having me today.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Networks, CREPN Radio.